Hello, fellow traders. Tis I, the Rumpled One, coming to you on Thursday, April the 10th. The year is 2025. Let's talk trading. Back to the open with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal. And a friendly reminder to always use risk management. Never lose more than you're willing to lose on any one single trade or single session. So, back to the open. You've heard or you've probably seen that movie Back to the Future. Well, after what happened yesterday, when I opened the charts up, I noticed there was a lot of going back to the open. So what that means is if you have a really big bar, price sometimes likes to go back to the open. And if I remember correctly, there was an example on the dollar yen. It looks like I clicked on the wrong chart. This might take a while.
While you're looking for that chart,
Yeah.
I'll talk a little bit about, that it's just, we see this, and it's not just on any one particular instrument. It's across the board on all of the instruments in Forex, and it just, price, for whatever reason, if it moves a big distance at some point in time, it always likes to go back to the open with that big bar. I suspect the reason why, I can't prove this, but I suspect the reason why it does that is very simply because the fact that when it moves a big distance like that, a lot of times people get caught. Their stops are on the other side of that line, and they get caught, and they're upside down. Now, people like you and I, we can't do anything about it. But if you're an institution, and you get caught on the wrong side of it, well, they do have the money to either wait it out, or they have the money to go and push the market back in that direction and get some momentum going in that direction.
Yeah.
And then hope that people like you and I can go and jump in.
Yeah. So you had mentioned right before the video there was an example here on the 1 minute chart on the pound dollar. So I just pulled that chart up.
Yeah, if you look now, what is let's see,
about 8 or 9 bars.
Yeah, about candle 11 or candle 10. Yeah, get that big white bar going up, and that thing ran up what? It ran up 10.5 pips, and on a 1 minute chart, you get a 1 minute chart where it goes up 10.5. That's huge. That's a huge move, and you'll see that right the next 3-4 candles in a row, just methodically just ate a little bit, ate a little bit, ate a little bit, ate a little bit, and finally got to the open. And guess what? It rejected the open and ran back up the other way again. And here's something that people can go and maybe get something out of. So there are a couple ways to trade this. You get up to the top there and you see that, and then you see that you get a reversal signal. What's your reversal signal? Oh, yeah, flip flop box. That's one thing. And you could have gotten in at 25.2, and you could have run that all the way down to the original open of 29.18. So that would have been 6.5 pips that you could have picked up. That's one possibility. The other thing that happens a lot of times, if you get bars like this where it runs back to the open, get 3 bars or so, or 4 bars to run, it starts to establish a range. And that's what I look for, that pattern there. If you get a range like it's getting right now, and so what that tells you that right now, what you do is you get down to around 20, you go long. If you get up to about 30, you go short, and you just play the range back and forth across those 10 pips, and you can make some quick, 3, 4, 5 pips back and forth like that. I love playing that.
Yes, you do. Let's see. Let's take a look at the, let's see, on the pound. Do we have any big bars? The other one, I don't really see any standouts on the 1 hour chart. Let's see, there was a couple of down bars here from yesterday, there and there. And as you can see, sometimes it happens on one day and it takes it another day to get back to it. Um, I see it a lot on the H4 chart where you get these huge bars. Like, let's see, this is like 3 days ago. Well, it took it 2 days and it came right back. And so usually the play is it would be the most recent big bar in both directions. So you find the big red bar, you find the most recent big red, the most recent big green, and you can then look for the price to go back towards those opens.
Yeah, we have some big bars on the H1 on the pound from very early this morning during the London session. We had a big jump up where from the open to the close, and I'm not going to measure the wicks on it, but from the open to close, it was 20 pip, 20 pips. It's not huge, but the thing is, as of lately, that is huge. And then immediately after that, then we had a 15, 16 pip drop, and then we get back into our normal of about 12 or 13 for the body size. Um, I'm not talking about the overall range. I'm just talking about the body itself. I love looking just at the body. Why I got into that habit when I have. And then a couple hours later, we had another one where we had a 23 pip body, and then we had another one which was 21 pips. So right now, and then if you look from last hour, guess what it did? It went back to the open of all those bars, and so could have picked up some nice little pips there if you're just playing the hourly chart. The great thing about playing the hourly chart is it's much slower, and so it's much easier for you to find things and really look at it and make sure you're right before you pull the trigger. It, it purposefully slows you down, and as you say, hero all the time, if you're having some trouble, move up a time frame, you know, move up a little bit and just and then take advantage of that so you can sit there and see what you're doing wrong. You have time to really analyze what you're doing.
Yeah, because it'll definitely slow you down because you'll get less signals, and so
Yep.
hopefully you'll have time to analyze before you commit to a trade.
Right. And as you get better at recognizing things, then you can move up if you want to move up. If that's going to be your style. Some people, it's not your style. Some people would just, because the advantage of having that bigger time frame is that you can, in one trade, easily pick up 20 or 30 pips on that one trade. Whereas I'm sitting here, I'm doing on 1 minute. I'm happy if I get 4 pips or 5 pips. I'm thrilled, in fact, if I get 4 or 5 pips.
Well, it looks
So
like you could be
uh,
playing your 20 right here.
yep. See what happens.
It ran up from this level up to 23, so if you were quick enough, you could have had taken a couple of pips real quick.
Yep. Okay. What I would have, if I was trading, I'm done trading for the day. But if I was still trading, I would have put a pending buy sitting down at 20, and I would have just put a. To be honest with you, with this type of trade, I would have put a TP in for 3 pips, and just look to get out of 23,
Yeah.
and it just got it. So. And I'm telling you that it happens. This happens every day. You just gotta wait for it. You gotta sit there. The problem is that one of the things that about trading that's hard that a lot of people don't like, but tough noodles, as they say.
Hmm.
Sometimes you sit there and you can sit there, for an hour and not take a single trade. And you sit in there, I want to take a trade. I want to take a trade. I want to take a trade. Next thing you jump into a trade and then you get burned. And then you say, why didn't I just wait? Look, if I just had waited, look at this right here, what's going on right now. And it's so obvious what happened. But I can't because I'm already in and I'm moving the other direction.
Yeah.
And next thing you know, you're in that situation of if I'd only waited an hour,
Yeah.
right?
And and the other thing, you know, we like to also trade that H4 open, and you can see here an hour ago we had the H4 open, and we're just about right back to the open. We're just a couple of pips away. And the previous H4 was one of those big bars. So that's what we'd be looking to go back to that open. And then if you look to the left, you can see here, oh, when was that? That was at on the 4th at the 1600 hour on my chart. You can see here we've got another open to go about at the 1.3000 level.
And what's interesting is if you look, even at the current H4 open, the current H4 candle, it's only an hour and 8 minutes old. It's not
Right.
it's not a very old candle, and it already has a 40 pip range on it. Last H4 had a 96 pip. So it's like, man, that's a lot of movement. For an H4 that's only an hour old. And the interesting thing, and I say this a lot often enough, that if you notice on the current H4 open, it ran down a little bit past the midpoint to the previous body midpoint of the previous H4, and then it turned around and ran right back up. And it's one of those things again. A lot of times it'll do that. It doesn't necessarily immediately go down to the open. It'll go to some type of other, I like to call it a stress point, some other stress point, before it actually gets to that open. So, that's something for a cautionary tale, for traders. And here's the reason why it's a cautionary trade. So often, and I hear this story all the time, and I used to do it all the time too. We wait, and we overweight. And what I mean by that is that we get into the trade, and it's now at the midpoint. Yeah, it's definitely going to go in that direction, and that's the time when it goes and decides to turn around and go back the other way. I don't know why, it does it, but it just seems to do that often enough. So if you don't get in the beginning, and take the signal in the beginning of it, just just admit it. And it was, I missed the trade. It's okay. There'll be another one that comes down the road, and just admit it. Don't jump in and unless you get to the midpoint and you get another signal. You get a signal there, yeah, take the signal. If you don't get a clear signal, you're just jumping in because look at all that movement. I'm jumping in for price action. People jump into trades and say, I'm jumping in because of price action. No other reason, just price action. And then they get priced out of the market.
Right. I just kind of saw something. I've got your simple trade chart here with the red and blue stripes on the wicks. And it's almost like just visually, I just kind of have drew trend lines um, through through like the last couple of wicks or that last group. And you can see, let's see, let me do it. It's almost like it's telling you which way to trade if you do that. And I don't know, this is just something I just saw right here. And it's kind of like, well, let's see. It's definitely making lower highs, and it's making slightly higher lows. But if anything, I'd be looking to short.
Yeah. Well, the other thing too is that this is a typical flag pattern, and maybe we can talk about that another time what a flag pattern is. And the thing is, I'd be looking for this thing to break downward, but just because of that flag pattern. Um, but it's you're exactly right, and I'd be drawing those lines basically where you would have the draw that flag. I'd be drawing the lines right at your blue stripes and your red stripes. It's an interesting thing because in the past I never would have done it that way, but it's obvious. Look at that. There's the breakdown.
Yeah. And you know what? That's it, fellow traders. So go out there and drain the banks. Rumple one.